Hey, great to have you with me. It's Tony again. Listen, in this particular blog here, we'll be talking to you about, the potential risk when it comes to investing. Now, I see a lot of people in the market, they'll rave on about how much money you can make, how many millions you can make, how many properties you can buy in 10 years, and all this BS stuff. But I don't see a lot of people out there specifically talking about potential risks, okay? Because with any type of investment, there's always risk attached to it. But the trick to it is, how do you de-risk that investment as much as you can? Now, if you've seen some of my earlier blogs, you'll know and understand when we talk about how to leverage, we talk about how to set your finances up correctly, we talk about the right taxation structures, infrastructure, location, there's all the demographic data and research that goes behind it. So all those things are factored in to make sure we de-risk this as much as we can and keep your own home separate over here so you're safe. So some of the potential risks can be really, really simple. Number one, if you're in Australia around about 2018, 2019, there was a lot of uncertainty in the market. We had a Banking Royal Commission. The government had a body called APRA. APRA came down on the banks and said, hey, listen, stop lending to investors. We had a big influx of Chinese money that was coming into Australia at that particular time. For the 3 or 4 years previously, the markets were going through the roof. Then all of a sudden the Chinese government makes it really restrictive for Chinese to get their money out of China and bring it into Australia. So therefore, when money started to become less available or harder to get, then less people were able to invest, so therefore demand was dropping, and therefore while there's a bigger supply and demand was dropping, prices started to move down in a lot of areas and a lot of locations and in different markets. Now, having said that, we still had clients who were making money in a down market because we're in specific areas where we know there was still demand, there was still good capital growth going on. So don't get sucked into the overall picture. But what you need to understand is there's certain things that can happen in life, right? There's lending that can change. There's interest rates could go up. There's employment and unemployment. There's government changes to legislation. I know in Australia, I think it was 2018, there was an election come up and the Labor government were talking about, getting rid of negative gearing and introducing capital gains tax and changes to the property space. Now, that was going to affect a couple of million investors. Now, they didn't get voted in, but if they did, that just created a lot of uncertainty in the market. So when there's emotion and uncertainty, that can affect property and property prices. And in any given market too, make sure you understand this. Prices can go up, prices can go down, prices can drift like this. I mean, I always talk to my clients about this. I go, here you are today, and this is, say, 15 years from today. And in any 15-year period, it could have a bit of this, a bit of this, a bit of that, But the bottom line is, after 15 years, you should have had an increase in pricing from here to here, okay? But there will be things happen in between. So your job is to make sure you've got your cash flow under control, make sure, that you're fairly well secured when it comes to your work or your employment. You know how to earn money, make money. Be good with your money. Make sure you manage your money correctly, but also keep getting the right advice. Make sure your finance brokers are still looking at your loans and your structures, because things are going to change in life, folks. Somebody might not pay the rent. If you're unfortunate enough to have a bad tenant, I've had one bad tenant in 20 years, right? But you make sure you've got your insurances in place to cover all that. So if something untoward does happen, loss of rent, malicious damage, or any of those sort of things, you'll be covered, okay? So there are things that could happen out there, right? And just make sure that you understand property investing just isn't a smooth journey like that, folks. It's not a matter of, oh shit, you know what, I'll go and buy something today, I'm going to make a fortune tomorrow. That is not how it works. I'm a realist. I'm straight down the line here. Stuff is going to happen. You might lose your job. There could be a separation or a divorce. Family situations change. Life situations change. Property situations change. Supply and demand, population growth, changes to immigration laws. Stuff's going to happen, folks. Donald Trump sends out a tweet, 60 billion gets wiped off the stock market overnight. Shit happens. I'm going to tell you straight out, folks. Stuff happens, okay? So just understand that for today. It's a really short lesson. Part of my coaching, and if you read this blog, it would have been, there's 27 potential risks that I've listed. In any of my reports that I do, I always list the risks that are out there. And just make sure that you understand them. But the trick is to do this. You got to make sure you got to de-risk. Okay, so manage those risks, minimise those risks as much as you can, make that journey a little bit smoother and a little bit easier, but you will have to move and fluctuate as time goes on, folks. Make no mistake about that, okay? All right, now listen, I'm Tony. Hope you're enjoying the blogs. If you haven't had a strategy call with me, feel free to book a call with me today. Hope to see you soon, and I'll see you again on the next blog.